Hey everybody, Jake here with TrendSpider to go over the weekend analysis into the Labor Day weekend. And we've got some very interesting things on the SPY, the Qs, and Bitcoin. So I'll start with SPY, and you can see we've got a lot of stuff on the chart today. And this isn't necessarily, thinking we're going to go down or up. This is just generally kind of what I personally am seeing. Everybody is going to have their own. Opinion. Everyone's going to annotate differently. So these are all the different annotations that I've created on the chart to explain kind of what I'm seeing on the monthly and the weekly. So starting with the weekly, you can see the SHS, that stands for head and shoulders. You can see we've got our left shoulder, our right shoulder, and then our head, which was resistance at the top of the ascending wedge. And you can see the negative divergence on the MACD as well. So, I'm not necessarily bearish here, but I am kind of just showing you guys what I'm seeing. This is negative divergence until the fast does cross back above this trend line, and really even back above this area, because that's where the previous high was. So we really need to break above that, because if we keep going higher and we haven't broke above this, then we're still trading at lower highs. So that is the weekly. You can see that we are finding some support on this this ascending wedge support here, and we'll just have to see if this previous shoulder breaks through. So you can see we're pretty much right at this area. So really I'm looking for like a break and close through 295 to really kind of break this head and shoulders. Looking on the monthly, we can see something very interesting, and we've been posting this chart a bit. And not even saying it's going to materialize. It's just something that's very interesting on the chart. And the reason why I say it could not materialize is because we've had times in the past where we've had negative divergence like this. You can see in June, even October 2014, all the way to July 2016, there was this negative divergence, but we actually broke through it and continued up. So the negative divergence failed here. But if you look back, we had a negative divergence occur here, and you can see we actually did have negative divergence, right? It's very hard to see, but we did have higher highs here. We had lower highs here, and then this was the divergence. I'm creating this divergence here for the longer term, but this was actually short-term divergence too. And you can see that we did pull back, over 8% during this time. I remember that back in 2015 when China was having all its problems. We were in the oil bust, but then you can see that we continued back up. Now the problem is we're very overextended in this entire rally since 2009. You can see here that we did have this short-term negative divergence. It occurred very similar to August of 2015, and then we kept moving up. Now, if you look though at the length of time, this move has taken much longer than this move, and it's had a higher return. So for me, I'm kind of looking at this as, okay, is this the longer term divergence starting to set up here, similar to how we had this longer term divergence? Notice how we corrected and continued up, but this divergence actually continued until we had our big move down in 2000, and then also again in 2007, 2008. So I'm not necessarily saying we're going to have another 2007, 2008, but we've already had our negative divergence once, and then we had another set of negative divergence setups that really failed to break out. You could blame the Fed on that for keeping interest rates low, whatever you want. But the point is we're right back at this area. We're in a very similar situation where we've got possibly, this divergence setting up how we did in 2015. But if we break through this trend line, then we're going to continue up. So my question is do we break this trend line to the upside and continue the move up with cheap money still out there, or do we finally start a longer term move down and bottom out somewhere around below 30 on the RSI, similar to what we did back in 2002 and then as well in 2009? So my guess is as good as yours. Just kind of looking at these inefficiencies in the market when they've occurred over the last 20 plus years, and we are there again. The question is do we continue up or do we have that longer term move down? We will see, but if it's anything like the last two moves, we had a negative 46% move in 26 months here, finally bottomed out. Then we had another negative 50% move in 16 months, and notice how we double bottomed here, which was a previous level of support. This is a previous level of double topping here. I mean, a move down to 156 would just be unreal. I'm not going to say it can't happen, but I mean that's a huge move. That's almost a 50% drop, but it is in line with these two moves as well. So we'll just have to see what happens. But I can tell you, me personally, and it really doesn't matter. I'm not licensed. I'm not a broker, advisor, or anything like that. But me personally, I am liking to hold some cash, but that's just me. I could be wrong, and I may have to be chasing in a couple months. We'll just have to see. But all in all, definitely something to keep in mind. What I'm going to do is I really want to set an alert below. So what I'm going to do here is let's add the, what do I want to add? EMA 50 here. So you can see the EMA 50 has really been an area where the price has almost found support once here. And so naturally, that's where I'm going to put this alert on this moving average. So what I can do in case the price action doesn't get exactly to this line, I'm going to increase the sensitivity here, and you'll see I'm going to increase it all the way to where we opened back in September. Actually, this was January 2019. But you can see that where we opened at the candle here, that's where I want my sensitivity to. And so if the price action continues to break down here, I will be alerted whenever the 4-hour candle closes anywhere within this purple area. And let's have this expire in 45 days. I don't necessarily seeing this type of drop happening in 45 days. So I may have to reset the alert if this goes untouched within 45 days. Alert is created, and now we are ready in case the price action continues to break down here. So all in all, we'll have to see what happens. Never a fan of negative divergence, especially on the longer term chart, especially as we've seen this for almost a year and a half now. So yeah, we'll just have to see what happens. Moving on though, let's go look at the Qs here, and we've got a pretty similar setup. We've got something a little different. I've got the percent range here rather than the RSI, and we're looking at a shorter term kind of area here. So you can see this is the monthly. This is the weekly. You can see that we have really found support for the third time on this ascending wedge support, which was only tested 2 times. Notice how this candle on SPY didn't actually get to this line. So we have tested this line 1, 2, 3 times. We did have a nice move up. So we'll have to see if this, this could even test this previous area, which is the left shoulder. So we do have a head and shoulders technically here. We've got the left shoulder, the head, and then the right shoulder, but we could actually move up higher to this previous left shoulder area, which is around 191. So that would be an area that I may be possibly watching into next week. But that's just me. Everyone's going to have their own price levels that they're watching. But for me, one thing that I really want to keep an eye on is the MACD. So if the MACD fast continues to break down, I want to know. So what I'm going to do is create an alert on the MACD here. Create alert, multi-factor alert. And what I can do here is I'll do the weekly indicator. MACD fast has crossed down through the constant level of 1.5. So we'll do MACD breakdown. So now without having to code anything in or have the system, turn this into some coding language for me not to understand, we've got simple logic here, and that's the weekly MACD fast, which is the blue, crosses, that's crosses up. Oops, that was almost the wrong one. Well, let's do this again. MACD fast crosses down because we wanted to see that continuation. The constant level of 1.5. So create alert. So now whenever this blue line crosses 1.5 down here, I will be alerted and I'll know, okay, the MACD is starting to move down lower. Maybe this is starting to get a little more serious. But on the monthly chart, we can see here that we've got this divergence that formed from 2017 all the way to the middle of 2018. And then we had a pretty nice move down afterwards. And you can see here we're kind of in the same spot. We've got lower highs here, but higher lows, barely, but we have them. And so, do we continue down? This is kind of what I'd call, I wouldn't necessarily call it a hanging man, but it does show that sellers were in control at some point this month with the wick way down here. So do those sellers come back when September starts? We'll have to see. But all in all, this is divergence that I'm kind of looking at on the monthly, and that's why I'm kind of doing a lot of spectating now because it is a headline-driven market. I mean, people say that technicals don't matter, but they do, because if there is a really bad tweet that comes out, the market is generally going to correct or move down to some specific technical level. So technical analysis still is very much in effect. And yeah, this is the Qs, kind of looking similar to SPY. But it's the market. Anything can happen, and that's why it's always important to keep your options open. Going to Bitcoin on Coinbase Pro, we can see some interesting things here. We can see, going back in time, these are the two times the MACD's crossed. We had a cross here, and then we had this huge move up. We had the next cross here, which was, we've had other little fake outs, but this is a true cross. We have our continuation up. Same thing here. The MACD is hard to see here just because the price action was so low compared to kind of what happened after. And the MACD isn't a function of price, but it's just showing how much momentum really occurred once we got up here. And that momentum in the MACD is making this look very small. Here, it's a little different. You can see the fast breaking out through the slow, continuing up, breaking through the zero line. But now, on the weekly candle, we can see that this fast is crossing through the slow. This is actually the last day of the month for Bitcoin and any cryptocurrencies out there for the monthly candle. So for me, I don't trade crypto really, so I'm just kind of looking at this and getting a general idea of where the market as a whole for crypto may be going. But based on this, we are at this previous resistance area that was tested. We never got to retest this area. But at the same time, we can see that we have held this base. So if this is kind of like a flag for the next leg, that's very possible too. Bitcoin has a mind of its own. But at the same time, we do have to look at the technicals here and see some of these things that are breaking down, which can become self-fulfilling prophecies. So for me, if we really start to break down through this previous area, that would be something I would look at. So same thing, I'm going to create an alert at this general area. So create alert, and rather than just getting an exact alert on this line, I'm going to have it alert me within 150 bucks above or below this line. So now when I know when we break down through this area, that's going to be something for me to definitely check out. So about 9,000, which is a pretty psychological support level below anyways. So now I create my confirmation candle of the 4-hour. So whenever the 4-hour candle closes in this purple area or below it, I'll be alerted rather than having to wait for the weekly candle. So we have a breakthrough. Whenever the price actually breaks through this line, we'll be alerted. Let's say that I just wanted to know when it touches this line. I could also choose that as a trigger. But in this case, we're just going to do a breakthrough. We'll do breakdown below base, and we'll have this expire in 45 days. So now the alert's created. If we do break down through this line, I will know, and we'll take it from there. As I mentioned, I don't really trade crypto, but it is something I like to look at just as overall sentiment in the markets. And Bitcoin isn't always connected to SPY, but there are times where there are some interesting moves between the two. But that wraps it up for me. This was a weekend analysis to show you guys how you can utilize the TrendSpider platform through our alerts, our multi-factor alerts, our strategy tester, which I didn't go over much, but you can utilize any condition that you can think of. You can go and test that. So if you want to look at the MACD crossing above X amount of constant level, as well as, let's say, the let's also say the RSI breaking through X amount. You can create these conditional alerts or criteria without having to do any coding on the back end. So TrendSpider is here really to make your life easier, more efficient on the technical analysis side of things. And we hope you enjoyed this video. If you have any questions about our charting platform, please feel free to reach out. TrendSpider on Twitter, Facebook, Instagram, or you can reach out at hello@trendspider.com, and we're happy to answer any questions you have. Everyone have a fantastic Labor Day, and thank you so much for listening in.